Hi you guys, I'm Phil Town from Rule 1 Investing, and I want to talk to you about a few of the most common investing mistakes that people make when it comes to the stock market and how to overcome them. So the first mistake that people make when investing, and this is the biggest mistake of all, is they just don't understand the company they're investing in. Charlie Munger and Warren Buffett and Manesh Prabhai, Guy Spear, great managers of money who manage to get enormous returns and do it the way I'm teaching you guys, all have an area of the market that they get really good at. They call it their circle of competence. And those guys stay well within that circle because they know they need to understand the business that they're buying. Most people, when they invest, don't even treat it like a business. They just treat it like a piece of paper, and they just hope that the price is right. So you can't begin to invest properly without first understanding the business. Second mistake people make is they don't have a plan on how to invest. They just basically go out and start putting money into things they don't understand. They don't know how much money they're going to need to retire, and they don't know how much time it's going to take them to get there for any given set of returns that they expect to make. So they're just basically flying completely blind. I got to plug something here. We got a really good tool up on the website that'll help you figure out that kind of retirement requirements that you're going to have depending on how much money you're starting with, how much money you can put in every year, and the rate of return that you can reasonably expect to get as an ignorant investor, somebody that doesn't know anything, just invest in a broad market bunch of indexes, versus somebody that knows what they're doing. And you're going to see what a shock it is, how much money you're going to need to get and how long it's going to take you to get it. So take a look at that tool. So the third investing mistake that people tend to make is they just don't have enough time. They haven't given themselves enough time. Really, really easy to get to a good retirement if you start early enough, but we never do, right? We always have a million other things we're going to use that money for. It seems like we never make enough money when we're starting to have kids. Then by the time the kids start to go to college, we still don't have enough money. So it's like we never catch up with it. You got to follow this advice to put away a little bit of money for yourself all the time, pay yourself first, and get going on it right away. Now, the good news is, even if you're starting extremely late, you're 55, you're 60, you're 65, and you don't have enough of a nest egg to retire comfortably on, the good news is that doing Rule 1 style investing and being aggressive with it can still get you where you want to go. I started with $1,000 and I got to $1.45 million in just 5 years. So it's never too late. Now, the fourth investing mistake people make is buying stocks based on tips from experts. All right? Tips from experts is a terrible way to buy stocks. When you buy stocks based on tips from other people, you're going into a company that almost inevitably you don't understand, almost inevitably you don't know what it's worth, and almost inevitably you end up with a bad rate of return. And this is just a bad habit people have from being lazy or from just not having a clue on how you'd evaluate a company in the first place. Now, this isn't to say that getting a little tip from an expert is a bad idea all by itself, because if you know how to analyze a company, noticing that Warren Buffett is buying it might be a really cool thing. You get in there, figure out why he's buying it, maybe you can buy it right along with him, which could be a really good thing. But never just take somebody at their word, hey, this is a great stock, go buy it. Terrible idea. All right, fifth investing mistake people make is buying stocks that appear really cheap, but they aren't really cheap, actually. Now, this is a really common mistake, especially when the market drops a lot. You'll see people saying that this stock is on sale because it used to be at 100 and now it's at 50. What they don't realize is that when it was at 100, it was massively overpriced. Chipotle Mexican Grill is a great example of that right now. It was at I think a high of $750 a share. It fell all the way down to 400, where it's, about what it's worth right now. So you really got to understand how to value a business, not just assume it's on sale because it went down. Now listen, I'd love to hear from you guys about this stuff. Have you ever made any of these mistakes? And if you did, were you able to overcome them, and how did you overcome them? So leave a comment below with your answer. We'll be sure to follow up with you. So thanks for watching, you guys. Now go play. And if you enjoyed the video, you thought it might be valuable for teaching you more about investing, love it if you subscribe to my channel and then share this video with your friends or anybody else who might benefit from it.